Well, g'day there traders and friends, market enthusiasts right around the world. You are here with James on behalf of Pivot Point Trading as I sit down on this particular Saturday, the 13th of February 2016, and just bring you a very quick market recap of the week which has just been. It was somewhat of a relatively bearish week, I must admit. Monday through Thursday, the markets were once again retesting that 15,600 level. But then again on Friday, the Bulls came back in, closed up 313 points on the daily. It left us with this very interesting type of candlestick pattern. It's a 2-day reversal candlestick pattern. It's what we call a one white soldier. And we closed right at the highs of the day. A very bullish candlestick in and of itself, showing up at the location where we would expect it to, if in fact it is to be a true signal. It looks as though this market right now, as at the close on Friday, is setting up some form of a temporary intermediate double bottom. So you can see the sell-off, or at least the beginning of 2016. We come back down and we sold off down to that 15.5 area. We sort of had these long low wicks showing and representing buying pressure. We had this little brief 2-week relief rally back up to about 16.5, but over the past 2 weeks or so, once again, we've come back down and retested that 15.5, 15.6 area. With this one particular candlestick setting up right here, there's a very good chance that this is going to be a short-term intermediate bottom on the Dow Jones Industrial Average, which will also flow through to the S&P and the NASDAQ. You can see that we are quite a way away from the 100 and the 200. The 100 is below the 200 in a very bearish alignment. We are still also below the 10 and the 20 exponential moving average and quite a distance away from the 50. But what's most important right now is the fact that we have been in a very oversold state on this market for somewhat of a prolonged period of time, except of course for that little relief rally which sort of finished mid to late last week. You can see that the MACD right here is starting to cross. It's giving us some bullish divergence setting up on the Dow Jones Industrial Average. The RSI has bounced once again off from that oversold reading, but the stochastics here is giving us somewhat of a sell signal. So you can say that some of these markets, or at least the oscillators, are giving us mixed signals. What you want to pay attention to right now is this MACD indication, where the signal line itself is still above of course the slow line. It is in a bullish sort of array or an arrangement right now. The histogram is about to tick back up, but what it looks to be happening right now is that since this hammer candlestick at support, it looks as though we're simply setting up some form of a double bottom, and it's not really a true double bottom, as though it's going to reverse what is the beginning of a bearish wave or a bearish, or at least a bear market in and of itself. It's just simply to say that, look, the selling pressure, there's a very high chance at least that it's run its course, and for the next couple of weeks, if not maybe a couple of months, we may see this market try and rally back up to about 16.5, if not a little bit higher, all the way up to 17,000, and establish once again the third consecutive lower high until really we start to see the big selling movements, or the big selling waves, move back into the market. That's really our stance right now. There's always the opportunity that markets tend to crack, or will ultimately and eventually crack, macro support. If I change to the weekly candlestick chart, again, you can see the weekly format, the way in which this candlestick has set up. You can see this long lower wick here, indicating buying pressure, very similar to what we saw 3 weeks ago with this other hammer candlestick at support. So, we've had these two hammer candlesticks right here. If you go back to the end of the August sell-off, we had a third hammer candlestick. It's showing up right at this location, 15,600. So, although the markets right now are exceptionally bearish, you have to take into consideration the simple fact that these equity markets, all three of them, are at macro support, and until we break macro support, the benefit of the doubt at the moment, or at the current juncture, needs to remain with the bulls until we crack support. And this can show up in a different, or in really 2 or 3 different wave formats. Until we break support, you have to remain short-term bullish on this market, especially given the buying pressure and the candlestick formation which we saw flow into the market on Friday. Very, very important piece of technical analysis which I wanted to bring to your attention as at the close on Friday. Long term, we are in a primary bear market. It appears that way, and by all indication, we've got lower lows to put into this market. But until we crack that macro support area, again, we're at macro support. We're belting our head into support for the second time in 2 months. And if this support level holds, the dynamics of support and resistance, or at least the buying pressure, the demand for stocks and for the market itself, is going to trump what looks to be the exhausted selling pressure, the supply of sellers. And because of that, it's going to result in higher prices only for a short time. This isn't a long projection. It's not a long forecast. It's just to suggest that, look, higher prices are on the cards if we hold the support, and those higher prices are shown on my chart here at 16.5 or even up to 17,000. That is a quick market update and what to expect for the week upcoming, all kicking off on February 15. What I've just done is finish another 1 hour and 30-minute presentation in Pro. It is up online, and we went through our top 12 individual trade lists and more comprehensively into gold, silver, the US dollar, the Russell 2000, and the transportational average. If you want to have a look at some trade ideas and some long-term hedges for what is most likely going to result in a very bearish and ultimately a bear market for 2016 and further into 2017 as well. So I just wanted to provide you with this brief little market update, all right? So friends and traders, market enthusiasts right around the world, it's James signing off on behalf of Pivot Point Trading. Have a fantastic weekend, and I'll be back with you next week for another market update. All the best and goodbye.